I've been paying close attention to Silvergate Capital for the last few weeks, as it seems that there is something going on over there. A few of the largest financial institutions in the world are currently investing heavily in the bank that many thought to be doomed. Many people in the market still think that Silvergate Capital is a poor investment, as it is the most shorted on the market right now when measuring by short interest, which is hovering right around 73%. So why are some of the largest players on Wall Street gobbling up sizable chunks of the company? Isn't it a complete dud? BlackRock acquired 1.3% additional stake in the company, bumping its shares up to 7.2% of the total outstanding shares. Susquehanna Securities recently acquired a 7.5% stake in Silvergate, and this week it has been disclosed that a large hedge fund and market maker, Citadel Capital, run by the famous investor Ken Griffin, bought a 5.5% stake in the fund. That's quite a bit of institutional investors buying a massively short security. Let me give some backstory. Silvergate Capital was a small bank in Southern California founded in 1988. In 2013, they launched their first into the cryptocurrency industry with a product that allowed for an easy transfer of fiat currency to cryptocurrency, and quickly grew the company to a multi-billion-dollar institution. It was first regulated as a bank to develop this sort of technology. Then the FTX collapse happened, and Silvergate lost over $1 billion in Q4 of 2022, which led to a massive run on their bank. Roughly $9 billion has been withdrawn from Silvergate Capital by depositors, and Silvergate has had to issue bonds to cover the run that they had on their bank. Luckily for them, they seemingly do not have any lending related to FTX digital token, so the exposure was limited to deposits, according to Silvergate Capital CEO Alan Lane. It was bad, very bad, but it could have been worse. Now there's speculation of the SEC coming down hard on Silvergate for their involvement in the FTX scandal, which is one of the main reasons for the run on the bank and the massive short interest in the stock. If, and I do say if, it is found out that Silvergate had more involvement than they are currently disclosing, or if the SEC finds wrongdoings related to the FTX scandal, then Silvergate could risk the loss of the banking charter. So what are these large players on Wall Street thinking, pouring millions of dollars into this declining security? Is it not soon to be delisted? There's a pretty good chance that the SEC comes in and ends their business, or the business could just go belly up due to the bank run. Why would anyone pour millions of dollars into this? Do they know something that we don't? The big players like BlackRock and Citadel do not lose money. If you follow their lead, you generally make good money, which is hard to do because their trades are not disclosed in real time. That is why being an analyst is somewhat of an art, but it also involves knowledge of politics and psychology. I try to understand the trades that the big guys make to see if I should be making these trades as well. I believe that retail is usually wrong compared to institutional investors, but it is much harder to ascertain what the institutional investors are doing in real time. When I see large funds making moves, I try to understand the plays that they are making. But on this one, I just can't wrap my head around it. And therefore, I'm going to stay away from Silvergate for right now. I'd like anyone in the comment section to explain anything I might be missing or that might be leading to Silvergate being a viable investment. Comment below.